Interest rates just went to the moon. Are you doomed as a buyer? Let's talk about it. Welcome back to the Living in Vancouver and Camas, Washington YouTube channel. I'm your host, Hannah Dubyne, and I'm so glad you're here today because we're talking about interest rates, which is a vitally important piece to buying a home. So we're gonna talk a little bit about what's been happening lately with interest rates. The number one source of information for this topic is gonna be a lender, because the lender is the expert on all things loans and mortgage and interest rates. But I'm gonna be giving you my 2 cents backed by data and statistics today. For reference, this video is really relevant late September, early October 2022. And if you've been paying attention to real estate news lately, you saw that mortgage rates hit about 7% here in late September, which is crazy, crazy high. Rates have not been that high in at least 20 or 25 years. So this has come to be quite the shock to the world. So quick background on why this is happening. The Federal Reserve is the group that's in charge of monetary policy in the United States. And their job is to put a damper on inflation and keep the economy in check so it's not like skyrocketing out of control, and it's also not, hitting the crapper and going down by 50%. So they're kind of supposed to keep things in check, in balance. It's a difficult job. Inflation was out of control the last couple years. They raised interest rates really quickly. That is their solution to slowing down the inflation. So if you're watching this video as someone who's going to buy a home here or really anywhere in the United States in the next 6 months, you may be a little worried. I'm here to hopefully quell those fears. I don't want to sound like a cliche realtor and say, every time's a great time to buy and sell and there's always opportunity, but truly from the bottom of my heart, right? I always come from a place of honesty. There is opportunity in every market. You just need to be positioned right and you need to be looking from the right angle. So as long as you are doing those 2 things, we've got an opportunity in front of us, which is awesome. All the economists that are way smarter than me are predicting that interest rates will come back down to something more normal in probably the next 6 months to a year. So if you're buying in that time frame, hopefully we'll be looking at something closer to 5-ish% again. But if you need to buy soon, listen up, these tips are for you. So the first strategy we're actively using for clients right now is to just take the bad interest rate, get a big seller credit, and then plan on refinancing in 6 months to a year when interest rates hit your target level that you want. So this tip is really only applicable to people who have a lot of room in their pre-approval. So that would be people that are really high earners or they have a high down payment. If you are right on the edge of your budget or you were right on the edge of your budget like a year ago, this isn't gonna work for you because you're not gonna be able to get the home that probably fits your needs. But let's say, for example, there's a home for sale for $700,000. We're able to negotiate $25,000 off that price. You get the home for $675,000. You take the 7% interest rate, right, approximately give or take, and you end up having to pay an extra $700 a month in interest versus what you will pay when interest rates go down in 6 months to a year. If you ride that out, that extra $700 a month for 6 months, right? That's $4,200. Or at the worst, it's about $9,000 for a year. But you got a $25,000 concession from the seller. Well, you're gonna come out ahead anywhere from $15,000 to $20,000. So when all the other buyers sat on the sidelines and decided not to buy because of interest rates, you just netted yourself $15,000 to $20,000 over what the home is gonna sell for in spring. So that is success, and that is one tactic we are using right now. Another strategy we're using right now is a 2-1 buy down. A 2-1 buy down is a mortgage product. You may have heard a lender talk about this before. And what it means is that for the first year of the loan, the rate is gonna be 2% lower than it would normally be. So if you're gonna get a 7% rate, then for the first year you get it at 5%. And then for the year after that, you're gonna get it at 6%. And then in the 3rd year, it's gonna go back up to the rate that you originally got it at 7%. So you would need to get, well, in order for this to not cost you a lot of money up front, you would need the seller to credit you that dollar amount to pay for this 2-1 buy down, because it does cost money to do it. The amount of money varies depending on everything in the transaction, so I couldn't give you a dollar amount for it. Definitely gonna be at least a couple thousand, but if you can get that credit from the seller to do the 2-1 buy down, that can usually float you through this current year and maybe the next year, depending on rates. And then you can refinance after that before it gets back up to that original rate of, we'll say, about 7%. So this is a great strategy as well. You are a little bit betting on yourself that rates are gonna go down. And if they don't, you might be in trouble if you really couldn't afford that 7% payment. So you just have to know yourself, know your salary, know what's coming up on your finances. Another option, which is not one I do super often, and it's not super recommended, especially right now, would be a permanent rate buy down. So that means if you're gonna get a 30-year fixed loan, which is the most common loan that people get when they buy a home, you ask the seller to give you money to buy down that rate from 7% to 5%. If you were to do that right now, quotes would range for like $20,000 for that. $20,000 just to buy down the interest rate. Now, if you go try and find that break-even point of when that $20,000 is going to be more savings than the monthly that you would have to pay more if it was 7% interest, that's usually many, many years out in the future. And there are so many opportunities for you to refinance between now and then. So that's why we don't recommend it. $20,000, a seller is not going to easily give up $20,000 for a rate buy down. The last great loan product we're using lately that's helping clients get through these crazy interest times is an ARM, which is an adjustable rate mortgage. Most people opt for a 30-year fixed rate mortgage, which means your interest rate's always gonna be the same, which is super reliable. But there are also products called adjustable rate mortgages where the interest rate can change within a window. It can't change whenever it wants to whatever it wants. There are rules for it, but this allows for some flexibility for you. So the adjustable rate mortgage product that would probably be most useful right now would be a 5-1. So that means for the first 5 years, the interest rate is fixed, and then after that, the interest rate can change. You are probably going to refinance in the next 5 years. So that's why it's a pretty safe bet. You do, again, have to look a little bit into the future and make sure that if for some reason you did get to year 6, you didn't refinance, things got worse, you weren't making money, you'd need to have a little bit of a contingency plan there when that higher payment does come or when the interest rates do start adjusting. But ARM product, we love that, and it has been very successful lately, especially for our high earner clients. So at the end of the day, you know, we don't control interest rates as realtors or as loan officers. We don't control the market. We just do what we can to help our clients win. These 4 strategies, but really 3, because the permanent rate buy down is not a super great option. These 3 strategies are what we've been using lately to help clients out. I would say, if you can, the best option on this list is gonna be to take that interest rate right now when all the other buyers have dropped out. Go get the house of your dreams at a good price, a way better price than spring, and plan on refinancing in the spring. Work with one of our preferred lenders who is there for you for life and wants to work with you as a strategic partner rather than seeing you as a dollar sign. Let's make a plan now during your purchase to refinance so that you're set up for success in 6 months to a year. Thank you so much for watching, and if you have any other questions about the current market, please feel free to reach out to us at Dubyne Realty Group. We'd love to serve you. And if you're thinking about moving to Vancouver, Camas, or Clark County, Washington, please reach out to us. Again, we'd love to be here for you. So thanks so much for watching, and we'll see you next week. Bye.